It's a big deal too. Can you imagine? I mean, I'm sure you've had the personal story of someone that just is in a rough spot. They see how this is helping them, and they start getting super emotional, and they're breaking down, and they're.
We have clients that cry tears of joy. That's not going to happen when you sell a health insurance policy or a Medicare sup or an annuity or something like that. But when you can financially change somebody's life, not only now,
it's a big deal,
in the near future, but for the rest of their life,
it's cool.
It's a transformational experience for them as a client and for us as an agent as well.
What is up? Welcome back to the CA Power Player Podcast. I'm your host, Cody Askins. Man, we got a couple special guests, big time special guests in office today, man, traveling from Miami and Indianapolis area, right? Florida and Indiana. Before I get to these two gentlemen, I want to tell you a little bit about them and their business, what they do. I think this will blow your mind today, the concept we're going to be talking about, and here's why. It's really got me intrigued. And I've been around some other people in the industry that do this. I do believe these two are as sharp as anyone I've ever seen that do this, right? First of all. But what's cool about them is I was looking at some stats, and it says that even though household net worth is on the rise in America, so is debt. Total personal debt in the U.S., all-time high of $17.5 trillion. The average American debt per adult is $67K. And 77% of American households have at least some type of debt. A bunch of you listening right now also, guess what? Probably, unfortunately, have a ton of debt. These individuals, they don't do debt consolidation. They don't negotiate. They eliminate debt using a type of life insurance strategy to help eliminate debt. I'm super impressed with what they're doing. Their company is EquityXL, which is an exclusive platform of Gordon Marketing, who's been around a long time. I've always heard amazing things about Gordon. Massive freaking company. Love what they're doing. I've even heard a bunch of stuff about Randy, the CMO there, who's freaking awesome dude, by the way, and I'm excited to get to know him more. Hopefully I get a chance to hang out with him in Miami at dinner. So please help me welcome. We have Mark, Sher, and Paul Bechtold from EquityXL. What's up, gentlemen?
A lot. I'll tell you what's up is debt levels in America.
Yeah, apparently so, right?
That's what we're here to help address.
For sure, yes.
Great to be here, Cody.
Thank you.
When I left Miami yesterday, my significant other, she goes to me, "Bring your gloves." I go, "What do you mean?" She goes, "It's going to be under 60." And I laughed.
Well, when you're coming from Miami, it's like, okay, you know what? It is funny. People come to Missouri and they're like, is it going to be cold? I'm like, well, depends when you come. You know, it's like I don't even know half the time if it's going to be cold or warm when I leave the house. You know, at least Miami, it's warm. Does it rain? Yeah, every now and then, right? But it's pretty warm.
You got it.
Yeah. But I love the area there too, and I love what you guys are doing because here's what I like. Here's what I like selfishly about our podcast is we try to highlight very impressive individuals with, who mostly have a higher IQ than me, and have had a ton of success at their niche and their specialty. What I love about you guys is you don't try to do it all. You do one thing and you do it really freaking well. You got in this game and you learned it and you've obsessed over it, and you try to help agents, help consumers get out of debt. And you know why I also like it is it's a very sexy topic. It actually is. Like, walk up to 10 people and ask them, hey, would you like a quote for life insurance? 9.5, maybe all 10 are going to tell you to get lost. Fair?
If not run from you.
If not 11 of the 10, right? If not run, like, oh my gosh.
Exactly.
Yes. They'd rather talk to a homeless person on the street than.
Right.
However, if they said, hey, like, what's the saying you keep saying, the phrase?
Well, we just basically ask people if there's a way to eliminate all your debt in as little as 5 to 7 years, including your mortgage, your student loans, your consumer debt, meaning credit cards for the most part, without spending any more than you're already spending, and build liquid wealth at the same time, would you want to know more, or would you want to have a conversation?
And I wonder what percentage, if they had that question asked, of the 10 would say, interesting, right? They would at least pause.
Well, if you're terrible at it, 8 will. If you're good, all 10 will.
Bottom line is, there's only 5% of the people that live in the United States can say, I have no interest in that. That's it.
Wow.
The other 95% need what we're talking about.
Yeah, yeah, and it's so like how did you get in this game? Like, what? Also, before I get to that, why? I'm kind of curious from each of you. Like Paul, why are you so fascinated with this concept? Why do you like this so much? Why do you believe it helps agents and consumers so much?
Well, I like it for several reasons. The first of which is, as I built my insurance business up over the year, I would kind of add another arrow to my quiver each year, okay? And there was always that one little thing that kind of hung out there.
Yeah.
And when I found this, I said, wow, almost everybody I talk to is a candidate. It helps.
That's rare, by the way. For everyone to be a candidate, potentially, right?
But the thing I liked about it is I saw where it was always going to help somebody.
Yeah.
Okay. The other thing is we're talking a lot about debt here, but what we do helps people even if they don't have any debt, because all of us have money coming into our household and our economy. Okay.
Correct.
And we're going to spend that money out. Now, do you want to spend out the money and give it away, or would you like to first earn some compound interest on it before you give that money away? Okay.
Yep.
So all the social media is all buzz. Would you agree about infinite banking and all that?
Gosh.
And people kind of throw that acronym around, IBC, without really knowing what's going on. Okay,
Correct.
that is a trademark name of the Nelson Nash Institute, by the way. So to really say you're an IBC advisor, would you agree, Mark? You have to be certified as an IBC practitioner.
Interesting.
Right? Okay.
Yeah.
So
I think a lot of people don't do research, and I think they just like that's why I'm excited about this relationship. And then Paul, I want to jump to you too. I'm sorry, Mark, I want to jump to you too. I like your slogan is supersize the net worth, right? Supersizing net worth, EquityXL. I want to help supersize the awareness around this topic. Like as an example, like Gordon Marking's always done a great job over the years. Sylvia Gordon, Rebecca Gordon, et cetera, with content, Medicare videos, YouTube channel, et cetera, right? Phenomenal. Great brand awareness. Now let's supersize the awareness around this topic, right? Which is cool. But also back to that, I don't think people do enough research. I think that people are just used to throwing things around, not realizing whether it's going to like get them in trouble or not. You know?
I would like to finish
Please,
the topic on, you said what attracted me. So what attracted me is that I could always have a winning outcome every time. And the other thing I loved about it is it's based on guarantees. So I like to say you can win the game before you play. I can take somebody's debt information, put it together, and I can show them their report. And they don't have to commit to anything until they see their numbers. I can show them they're going to go from 30 years down to 6 years debt-free, and then all their consumer debt's going to be gone in 2 years down to just the mortgage on a timeline that's guaranteed. If all they got to do is follow the recipe, right?
Yes.
The other thing is going back to what you really do well, Cody, which is attracting agents into the insurance business, right? I had something that created a track to run on, especially for an agent that didn't want a lot of different products to study and understand and know all the nuances of, and they didn't want to have a bunch of different systems. They had one system, very few carriers, because it's not about the carrier at all. It's about the solution that we're able to provide to middle-income America. Like my partner Mark here says, 130 million people in this country work to earn a paycheck. And that is our market. So,
amen. Yeah. Also, too, before I jump to you, Mark, also wanted to mention too that Paul has co-authored a book, "The Average American's Road to Financial Freedom." I believe the link is below. You guys can verify that and check. But I believe it's EquityXL.biz to go actually like fill out the form
to be an advisor.
To be an advisor and actually download, and we'll be able to send them this book too, if I'm not mistaken, which is pretty cool.
And it's EquityXL.com for consumers.
Yeah. Okay, good. Yeah, EquityXL.com for consumers, EquityXL.biz for an agent or advisor. Also, I love material people can like read and educate themselves, because we're only going to cover so much information today. You know what I mean? Like, it's going to be an amazing podcast full of a ton of great content. We got a bunch of good notes, right? We're all prepared. But there's only so much we can cover on a podcast. So if you're like, hey, I'm interested, intrigued, I want to keep learning, it's a good way to do that, right? Mark, you're also very, very passionate about this, and I would love to know why.
Well, a little bit of same reasons as Paul, but the bottom line is that you've got so many people out there that are just struggling.
Mm-hmm.
And they get, as you just alluded to, bad information on a regular basis.
Yep.
It's scary.
From some big personalities in the space, right?
From big
We don't have to mention
personalities,
names, but
from
big
some
personalities.
big major corporations. Okay. And they just don't know. One of the best examples of that is if you've got a bank account, Cody, right?
Yeah.
You don't have to tell me who you bank with, but
Sure.
question.
Missouri Bank.
Okay, so what does 70% of all the banks in this country, where do they put your money after you deposit it? They invest it, right?
Yep, correct.
And the safest place they put money is something called a tier 1 asset. It's their safest asset class. 70% of the banks put 20 to 50% of their tier 1 asset money into something called BOLI, bank-owned life insurance. Has your banker ever told you, Cody, hey, we're putting your money, we're buying life insurance with a chunk of it? Of course they haven't. Why?
Right.
Because they don't want you doing what they do, because then you'd be taking money away from them. It's just crazy.
That's interesting.
So when you can share what's really going on for people, you've heard it many, many times, knowledge is power.
Yeah.
It makes a huge difference. And just to go a little bit further about what Paul was going to say, there's 130 to 150 million people that work to pay their bills. That's our market. You can make 50, 75, 100, 150 a year, single, married, divorced, single, living a little bit of an upscale lifestyle. What happens at the end of the month? You ran out of month because you ran out of money, right? Folks make $300,000, $400,000, $500,000, $600,000, $800,000 a year.
Yeah.
Some people call that the American dream, right? Greatest things about living in our country is it doesn't matter the last name you're born with, the color of your skin, what language you speak. If you want to do that 4-letter word that everyone hates, and I'm not cursing, it's WORK, right? You can become as successful as you want.
True.
So we know that 72% of those people that are driving a nice car, living in a nice home, kids might even be going to private school, they're up to their eyeballs in debt.
Is debt a bad thing? Is it holding people back? Is it stressing them out? When is it good? When's it bad? Kind of talk through
listen. Debt is one of the biggest causes of stress in people's lives. I believe it's PricewaterhouseCoopers puts out an annual report, and one of the biggest things they talk about is how debt affects employees' effectiveness at work. And I don't want to quote it, but I think it's like 2 to 3 weeks a year employees spend dealing with their debt or thinking about their debt when they're at work.
That's a big number.
The productivity goes way, way, way down.
Dang, dude, that's 5% of their year.
So I'd love to address that as well on
Please.
Debt's a part of life, okay?
Yep.
The approach we take is not to shame people about their debt.
I love that.
You don't have to be a bad person because you're in debt. Hey, anybody that owns a home, probably a car, maybe they have a daughter that's going to have a big wedding, right? College education. Most people don't have the wherewithal financially to pay cash for those things or spend out of their savings, right?
What, 99% don't, if not more than that, right?
Yeah. That's a part of life. It's more a matter of what's the most efficient way to deal with it and eliminate it, okay? When Sir Edmund Hillary wanted to climb Mount Everest, he didn't say, hey, I just think I'm going to go for a walk today and make it up to the top, right? He came up with a plan. He made a plan to get up the mountain, right? He also had a plan of how to get down the mountain too, right? It started with a plan, and that's exactly what we put in front of our clients is a detailed and, by the way, guaranteed plan for them to follow. And they can know exactly, as I said, the outcome before they get started. They can win the game before they play. Yeah. All they got to do is take the cake box mix and turn it over, and take the cake mix, add a couple of eggs, a cup of flour, a cup of water, sugar, mix it up, put it in the oven for the right time and temperature, and the cake will come out of the oven exactly like we think it's going to come out.
Yep.
Okay? Because based on guarantees.
At least we hope so, because I love cake and cookies and stuff. You know what I mean? Also, you guys were telling me a story earlier. I won't get into too specific because it was a private story, but where a young lady was able to pretty much get out of debt in like 4.5 years and take like $500, and literally of money she was already spending, reallocate that. I think I'm doing good so far.
Here, let me help you, Carter.
Please.
redirect inefficient dollars.
Yes.
Go
yes.
ahead.
So redirecting $500 inefficient dollars per month, and she was able to get out of I don't know how much debt that was going to take her decades, and it was a strategy to get out of debt in I think it was like 4.5 to 5 years. It was crazy. Yeah.
One we were talking about was 4 years and 10 months. Okay, and here's the part, Cody, is she's going to spend $500 a month of just redirected dollars. It's not an additional expense. Redirecting $500 a month, but it saved her $1,275 a month in interest. And here's what people don't realize.
Wow.
People are caught up in that APR game, that the stated interest rate. So we get people that used to say to us back when interest rates were low, well, I don't really have any debt. I just have a mortgage and I got a 3% interest rate, right? And I'd say, great. How long ago did you either buy your home or refinance? Oh, I just did it 6 months ago. And I said, are you aware that the first month of a 30-year fixed mortgage, the interest on a principal and interest payments 59.3%? That is not 3% interest.
Yeah.
And what people don't realize is that's the legal way that the banks
They get their interest as fast as they can.
That's a legal way for them to invade and take your money. Would you agree that 59.3% is far in excess of usury laws, right? In every state there is, right? But they can legally do it because they've declared to you on a truth in lending statement. And here's what people don't realize. They don't realize one of two things. They don't realize that that's not just part of the game. Okay, some people just resign themselves to that because they think it's part of the game. Okay, the other thing is they don't realize is they can do something about it, and that's where meeting with Mark and I and developing a game plan based on guarantees creates a market second to none. So that's what we're really about, is finding those advisors that want to get in front of more people and sell more permanent life insurance using this infinite banking concept and create this foundational wealth plan for their clients that will last them the rest of their life.
And it can supplement what the agent or advisor is already currently doing. Like they don't have to just totally pivot and change everything and like stop succeeding in what they're doing. This is an addition.
Right.
A lot of people,
once they start seeing it, who knows? But
so a lot of people like to play golf, right?
Yep.
So
Dylan does for sure. Dylan's a good golfer, by the way.
Paul's a really good golfer.
Oh, let's go.
But anyway,
Dylan versus Paul. Now Dylan's shaking his head. He's losing confidence quickly.
Anyway, if you're like me and you're not a great golfer,
yeah,
you're going to hit some in the sand, right?
Oh, I'm going to hit a bunch in the sand.
If your ball's in the sand, you don't have a sand wedge, how are you going to get out? As an agent, if you come across a situation where someone has debt and you can help them, if you don't have this club in your bag, you can't hit it and you lost.
That's a good point. It's a really good point. What's the average deal size? Is there like, for those that are going to be like, is there any money in this? What's this look like?
Well, that's a great question, and I'd love to address that because advisors tend to want to fund policies in respect to their economics and their situation. So an agent likes to say, well, I could afford about $100 a month. That's not what we do. Okay, first, we don't want to view whatever the premium is going into the policy as an additional expense, because the way we structure the policies, the majority of the money's in the cash value, right? It's accessible, it's liquid, we can use it right away, right? So it's not an additional, let's say we did $500 a month expense. A good rule of thumb on that is 10 times whatever their age is. So if we're meeting with a 30-year-old, $300 a month, a 50-year-old, $500 a month. There's a couple reasons for that. One, we got to buy at least the minimum amount of base whole life insurance to do that. Okay, and usually 10 times that age is around that number. The other thing is, the older you get, the less time you have to compound your money, right? Because we're doing two things: we're getting out of debt and building wealth. And so those two factors together equate to that 10 times age kind of thing. So answering your question directly, our minimum case size that Mark and I usually say is around $500-600 a month. Okay. We see a lot of $5,000-6,000 a month cases too, especially when we get into business owner cases.
Totally.
And all.
I write 6-figure cases. 100,000 plus a month.
That's awesome. A month.
A month. Not a year,
crap.
a month.
Woo! So they're putting literally 7 figures into a policy, right?
Mm-hmm.
Listen,
annually, yeah.
Here's the bottom line. For agents, if you sit there and go to McDonald's and try and help people that eat McDonald's and work at McDonald's, not that it's a bad thing,
Sure.
it's going to take you just as much effort as it does to help someone who eats a Capitol Grill. It's the same amount of work.
You're supersizing a value meal instead of a net worth.
Exactly.
There you go.
You
Yeah.
got it.
You
And as a matter of fact, the person
Yeah.
who came up with this loves McDonald's.
Let's go.
He's the supersized guy.
That's hilarious. That wasn't one of you two? I don't know.
No.
Okay, so I like that. That's average deal size. That's like, obviously it varies drastically, but clearly if you find the right prospect and you know how to help them, which you'll obviously help agents with it, advisors, it's, there's some money in it. We'll just say that. Like, there's a lot of money in it.
But let's not talk about the premium. Let's talk about what the average case size commission is going to be. Go ahead, Paul.
Sure.
Okay, so we're not selling full target cases, okay, because majority of the money is going into the cash value in the policy. We do get paid a little bit on that, okay,
But
what
more
we're
on the target.
We're creating what we like to call a consumer-friendly policy, where the majority of money is going to the cash value.
It's weird that you want them to win, you know?
Yeah. Well, here's the thing, and here's the part about it that makes the real win-win. Yeah, you get less per case, but you sell a lot more cases because you have an endless market to tap into. And once that client sees, when they pay that first debt off, that it's exactly on the timeline, it worked exactly like you said it was going to work, how it was going to work, guess what they're going to give you then? They're going to give you referrals, right? They're going to tell their friends, their coworkers, their neighbors,
Your family.
everybody about it, because
It's good.
who isn't going to want that,
True.
right? Now here's
Then
the other,
there's like literal social proof, right? Which is cool.
exactly. Now the beauty of our platform too for the advisor out there is we try to meet the advisor where they're at. Okay, we get advisors, and this is the ones we love, is obviously the ones that say, wow, that's a track I can run on. I want to do this full time. I love this, right? I see the income potential from this. By the way, our top life insurance producer at Gord Marketing, and it's going to be again this year, is in the debt elimination space.
Wow.
Has been 7-8 years in a row.
Wow.
I was the first one in 2018, and I used no lead program. It was all word of mouth. I used existing book of business to generate my leads.
Which was primarily from health, right?
From my health insurance book,
Yep.
right?
Yep.
And
Perfect.
it was
segue.
it was easy. Okay, so we love that, what we call master producer, that's going to come on board. They're going to buy in. They're going to get the software subscription, and they're going to learn how to master the sales process. Okay.
Yep.
We also have a model called the affiliate model. Let's say you do Medicare, okay, and you don't want to mess with all the details. I have what I like to call the I don't want the labor pains, just the baby model, right?
Got it.
All you want to do is find the client, get a little financial information, bring it to me. I'll do them on a case split basis with you. And 50% of something is a lot better than 100% of nothing. Right?
And actually, the case case size will grow just because you're involved.
That's
versus
exactly
someone
right.
New too.
Whatever they're doing on the case split, I've had many agents come to me and say, "Oh, they don't have any money. I can only find $300-400 a month." And with dissecting it a little bit more and asking a few more questions, all of a sudden they got a $1,200 a month, $1,500 a month case. So we get those too.
Yeah.
We like to say there's an art and a science to doing what we do.
100%.
And once you wrap your head around that, you're going to be very happy because you're going to be helping yourself as well as clients.
Amen.
And that's the beautiful thing about what we do is when you wake up in the morning, you look at yourself in the mirror, you're honestly changing people's lives in a way that no one else has been able to do it for them.
It's cool. It's a big deal too. Can you imagine? I mean, I'm sure you've had the personal story of someone that just is in a rough spot. They see how this is helping them, and they start getting super emotional, and they're breaking down, and they're.
We have clients that cry tears of joy. That's not going to happen when you sell a health insurance policy or a Medicare sup or an annuity or something like that. But when you can financially change somebody's life, not only now,
It's a big deal.
in the near future, but for the rest of their life,
It's cool.
it's a transformational experience for them as a client and for us as an agent as well.
It's awesome.
Yeah. And from the agent perspective, think about this. You get somebody that's in their 40s or 50s and you help them get out of debt. And in the world we live in today, people don't start and retire at the same job, right? So somewhere in their 40s or their 50s, they're going to be on their second or their third job. They're going to have 401ks or 403bs, right? 457s or TSPs for the government sitting there that they can roll, right? And when they do that, what do we want to do? We want to help them get income for life with an annuity.
Yeah.
So when you've helped somebody eliminate their debt and do something that no one has ever been able to do in their whole financial life, when it comes for them, time for them to look at an annuity, who are they going to buy it from? All the little people scurrying out of the woodwork going, hey, you just left your job. You got a 401k. Let's roll it into an annuity, or they're going to buy it from you, right?
You gave them some really good financial advice once before, so.
You're a Medicare agent, right? AEP, you're super busy, right? And then it tails off, and then by the time March comes around, what are you doing, playing golf till next October, right?
Yeah, it's a lot of golf.
So
I'm good like Paul, maybe. You know,
but I'm just saying, so people T65 or older, what are most of them going to have? It's not going to be debt, although some of them have debt because they're under second or third wife or husband, right?
Yep.
But the bottom line is they're all going to have kids in their 30s and their 40s, maybe their 50s. And what's the last thing you want is your kid calling you up going, hey, Mom, hey, Dad, can you loan me 50? And it's not $50, it's 50 grand. Can you fix up the attic, the garage, or the basement so I can move in with the family for a little while? And when the parents introduce their kids to us and say, you need to listen to my friend Mark, my friend Paul, those are laydowns. And then as well, who doesn't want to talk about their grandkids?
Amen.
When we hear, oh, little Julie, little Jim became a doctor, that tells us average $215,000 in student loan debt for med school plus undergraduate school. Those are great places to get leads.
It's good.
Yeah, there's whole industry sectors you can make out of this. So, for example, the student loan industry, okay? Most kids going to college nowadays are going to have to take on student loans, right? The other thing is the parents are probably going to have to take on Parent Plus loans. There's a growing statistic of parents going into retirement, drawing Social Security. They're having their Social Security checks garnished to pay off their student loans. Okay, there's whole industries that can be built around this. Medical professionals. So one of the guys we're closest to in this industry, he has nothing but a business. He was a chiropractor that had 5 locations, and he learned how to do this 15, 20 years ago, started with himself. He paid off all of his debt, and he's paid off almost $1 million of debt in 36 months using this. And then now all he does is go around and teach other medical professionals how to do this. Maybe you know somebody that owns a slew of franchises like Subways or McDonald's or something like that. Maybe you know people that are in boom and bust industries like people in the construction industry where you lay a lot of cash out and then your receivables aren't coming in for 90, 120 days. There's all different kinds of applications for this, and they're all winning solutions that with a modicum of basic information out there and the ability to have a conversation with somebody, man, you can create a winning formula. I mean, what are we doing at the end of the day? We're putting money back in people's pockets. And the last time I checked, that's an endless market to tap into.
Amen.
Would you agree?
I think people are okay with that. Instead of taking it, they're used to insurance agents taking it. You guys are putting it back in and lowering debt and adding a bunch of extra retirement income at the same time.
Exactly right.
Here's one thing I was thinking about too is, I don't know if we want to go here or not. This is up to you. This could be controversial, but entertaining. I think it's part of my job at least.
For sure.
Whole life for this strategy. Why not IUL?
Well,
do we want to go there?
Sure, we can go there. Pretty simple. Whole life has guarantees. Okay? When we look at someone, we say, we guarantee you're going to be out of debt in 8 years or 9 years or 12 years or whatever it is, right? We have to back it up.
Can I add one thing to that too?
Go ahead.
People will say with IULs, well, my IUL has guarantees too. If you read the contract, and that's what the operative part is, you have to read the contract. You know, who are those contracts written by? They're written by the attorneys that work for the insurance companies. Okay, and so the contracts are always slanted toward the benefit of the insurance company for the most part, not always, okay, but for the most part, right? And those guarantees in IULs are always like a retroactive thing. Like if the policy doesn't perform over time, you're guaranteed to be made whole and back paid on that policy, right? They don't have year-to-year guarantees, I think is what Mark is getting at.
Well, the most important thing is this. If you're an agent that likes selling IULs, that's great.
Yeah.
Okay? For what we do, we need to have guarantees. We need to be able to access the money in the policy 10 days after it goes in, okay, which is a big problem for a lot of IULs. But the biggest thing is that just imagine.
Wait, you should access the money 10 days?
After you make a deposit into your policy, and let's just say there's $1,000 in cash value.
Sure.
You can access 95% of that money in 10 days.
You cannot do that with an IUL?
It's
Harder,
pretty
maybe?
difficult.
Yeah, okay.
It's pretty difficult.
I was thinking it would take longer for sure.
There's many different companies that sell IULs.
Totally.
They all work differently.
Yep.
Whole life, pretty much. A lot of them work most of them work where you can access the money within 30 days. We use carriers that specifically want to be in the banking business. Okay. Now, the last thing I was going to say is this. Imagine you sell IULs and you go, well, why do I want to work with you guys? Well, let me show you something. Let's say I can free up that $500 a month in 8 or 9 years is going to free up $5,000 or $6,000 a month in debt that they were paying. As soon as you got them debt free, you can say, hey, time for an IUL. You got a $5,000 or $6,000 a month IUL sale down the road.
Yes.
So just remember that.
Yeah, one of the beauties of the whole debt elimination process is it builds you an inventory as an advisor for future sales. Okay, so for example, we say that we'll help people get out of debt, mortgage and everything, in usually 9 years or less without spending more money. Usually the consumer debt is gone, would you agree, Mark, 80% of the time within 2 years. Okay, that's pretty. All the consumer debt.
2 years.
Your credit card debt. Right?
Got it.
So say
Understood.
24 to 36 months, you're pretty much going to have everyone out of their credit card debt, which is going to move their credit score up dramatically. Because remember, 30% plus of your credit score is how much debt that you owe.
Then they have more excess capital.
They got the cash flow that was
continue to redirect and deploy.
The cash flow that was going to the debt that now can be redirected. So now maybe, especially when I was meeting with husband and wife and they got a couple kids, okay?
Yeah.
Here's what I like to say, Cody, more than anything nowadays, okay? We got, I think, 4 simultaneous crises going on in the country right now. One is record levels of debt. Would you agree? Mm-hmm. Coupled with that is not enough liquid cash to meet a financial emergency of $400 or $500 a month or more. Okay, what's the percentage? 36%, right, Mark? That can't pay a $400 financial emergency. Don't have enough liquid cash
without borrowing from a family member.
What percentage? $400.
$400 a month. It's about 36% of the people don't have that laying around in case of emergency.
Okay. Sad.
There are 40% of Americans that are saving no money, and that would include retirement, right? Mm-hmm. Okay, so you've got debt, can't meet a financial emergency, no liquidity, right? Not saving, no liquid savings nor any retirement savings. But on top of that, the vast majority of families out there are far, far, far underinsured. I mean, you're in the life insurance business, you see that every day. And it doesn't matter whether that's final expense or term insurance or what it is, but there's not near enough life insurance.
Yeah, a lot of them, if they have anything, it's like it's going to take care of income for like a year. It's very minimal.
So let's just say that Mark and I are meeting with that husband and wife to have the 2 kids. Okay, plan on sending the kids to college one day and all the trappings of life, right? Middle income America, right? Okay,
that's the market.
Right. Now I've just gotten them out of all their consumer debt. So I did one on the husband or the wife, either or. Now I'm going to do a second policy on the other spouse that didn't have one, right? Okay, so now they're protected if the unexpected happens, right? I'm probably going to supplement that with maybe some cheap term coverage till all their debt's paid off, and we create increasing death benefit permanent policies,
Makes
right?
sense.
Okay, so do you see how you automatically bake in a future inventory of opportunities within a given family? We like to say that we create the financial Swiss Army knife, right? It works if you have debt. It works for an emergency financial need, okay? It is a better place to store your money than a bank. It's earning 4% interest, compounded, tax-free, okay? No 1099 at the end of the year on your interest earnings, okay?
4%'s going to be on the low side.
Yeah.
Yeah.
Some of the contracts today are up at 6%, 7%.
Right,
awesome.
right. Tax-free. So now it's looks, feels, tastes.
I like that you guys are conservative and realistic and not just like spouting these massive numbers. I see stuff on social. It's like making people think they're all going to get 15, 20% forever. You know, it's like,
And again, that's part of the problem in the industry.
Yes.
Is that you get an insurance license and you're all of a sudden an alleged expert.
yeah.
And
Financial expert.
and what's happening, you're just listening to the people that are teaching you,
Correct.
which is one of the big issues in our industry.
It is.
How successful are you going to be in our industry? The number one thing is, who are you affiliating yourself with to teach you? Because you're going to learn from them. And if you're learning from someone that doesn't know, then you're not going to know. And it just keeps creating in a little circle that's not a good circle.
Yes. Also, you said debt, emergency, better place.
to keep and store our money. I mean, it's just as liquid, if not more liquid, than a bank account. People think, I got $30,000 in my bank account. Go try to get $10,000 out tomorrow. You're probably going to have to fill a bunch of papers out. You may have to wait 5 to 7 business days to get your own money back, right? We have our money back in 48 hours with a life insurance policy, right?
Wow.
Okay.
Go ahead, Paul.
Now, here's the biggest one. Okay, this is
number 4 or 5?
There's a lot of them.
There's a lot of them,
Okay,
but here's the big one, okay? When somebody checks yes to that question on my financial intake form of they're planning on sending their kids to college, that's a lay down. A lot of people don't realize this, okay? Cash value life insurance is an exempt asset when they go to fill the FAFSA out for the EFC calculation for college, okay? And here's the other thing I ask them. Let's say that.
That's good.
Don't forget about Medicare.
That's good.
Well, I'm going to get to that one in a
Okay.
second, okay? But let's just say I'm meeting with Bobby and Sally, and they got a 3 and a 5-year-old, and they say, "Yeah, I'm planning on sending my kids to college." I'm going to look at them and say, "Well, what if they don't go to college?" Because now you're saving inside of something like an UGMA, an UTMA, a 529 plan.
Yep.
You got to pay a penalty to get your own money back if they don't go to college.
You do.
With our plan, I don't care if you go to the State University or the School of Hard Knocks or Amy's Beauty College. It works no matter what.
Cody sells team or whatever.
Or he runs off to join a rock band and wants to use the money for that. It works.
That'd be Brett for sure. Yes.
So our plan works no matter what. There's no penalty to get your own money, and you safely stored it where it's going to lower your expected family contribution to college. So Mark and I have had several calls. We have some college planning leads. And would you agree, Cody, that a college planning sale is like an emotional kind of sale? I mean, parents will do almost anything to send their kids to college, to give their children the opportunity of a better life.
100%.
And I look right at them and I say, well, let me ask you a question. Is there a chance that while you're trying to find a way to afford send your kids to college, you may have to take on more debt? You may have to either suspend or spend down your retirement, and you don't really have a plan to do that. Suppose I could show you a plan that's going to lower the expected family contribution for college. I'm going to show you how to pay your debt off, not take on more. I'm going to show you how to build up your retirement versus spending down or compromising it. Would that not be the ideal perfect storm? And what do they say, Mark?
No, I don't want that. Of course they say yes, right?
Yeah, they say, what plan do you have in mind? They will buy every time.
Good.
Okay,
Good
so you got the college. Then you got we were talking about the college as a it had what we like to say means tested financial benefits, right? Same thing with your Medicare Part B and D premiums and your Social Security taxation. Money inside of a cash value life insurance policy is not going to violate the IRMA calculation for that. Maybe also later you need long-term care coverage or something like that where you're going to be means tested, okay?
Yep.
But at the end of the day, the other thing is, let's face it, something's going to happen to all of us before we exit this earth, right?
Amen.
You're probably going to get sick before you pass away, so
Probably.
critical, chronic, terminal illness coverage.
Yep.
And then we've got a policy that works for when you pass away, not if you pass away.
Yeah, and one of the things you forgot,
good.
Paul, because you usually don't forget, is that life insurance in most states is asset protected and creditor proof. No one can sue you out of that money. And we live in a very litigious society today.
Yeah, unfortunately so.
Yep,
Hate to say it, but even the divorce statistics aren't good in this country. Better than
No.
50%, right? If husband and wife each have their own policy, you get divorced, you take your own, and nobody can take your money away from you
Correct.
too. So
It's crazy.
that kind of thing.
It's crazy. Man, this has been so educational. Like I'm learning. I'm enjoying this. I'm loving this. Also, you guys are listening, man. If you guys love this thing, let us know in comments below. Obviously, you can go to EquityXL.biz, right, to speak to you guys and to
Or to
even
become an advisor,
access to
correct.
the book. Are we missing anything else? I know they can. They can continue to learn. We can't educate everything at once, but
But if you're a consumer and you're listening to this and you want to know more, go to EquityXL.com.
got it. Yep. Good point.
Yeah.
Good point.
And by the way, if you're an advisor that sees that EquityXL.com and you become an advisor with us, we customize that for you so that you can send it to your clients. And when they inquire, and then
Inbound lead flow.
they got a lead
Exactly.
flow as well.
Let's go. Agents like some leads, man. They love that. That's phenomenal.
Here's what I really like about working with Mark. I mean, it was a blessing in my life when I met Mark and
cool.
we started iron sharpening iron, right, and learning from each other. And I can tell you this: we have 17 plus collective years of experience in this market.
It's cool.
Because we're constantly honing our skills and we're constantly learning one more thing. But what I can promise you as an advisor out there is this market isn't shrinking and going away
No,
anytime
it's
soon.
only getting bigger.
It's only going to get bigger, okay? I could tell you this: you could fix a whole lot of problems really quickly and give people a lot of peace of mind and create a financial plan for them that will last them the rest of their life and will create a lot of generational wealth if they hand it down and they pass it on. So that's what I really love about what we do.
It's awesome. Thank you.
As well as create a great financial opportunity for yourselves as an
Amen.
advisor.
Mark, haven't you had a couple of seven-figure income producers?
Yeah, and I'm not talking about people who had agencies. I'm talking about people on their own pen have made 7 figures
Yeah.
Doing this.
doing this. And we have lots of people who make 6 figures. And I'm not talking 100, 150, $300,000, $400,000, $500,000 a year earners.
It's awesome.
Yeah.
It's cool.
The very first year I did this, I think I made $275,000 just on this, on top of my health
incredible.
business and all that.
While helping people. It's cool.
Cool. How much better can it get than that?
Yeah. Especially eliminating debt. It's amazing.
Yeah.
You guys are rocking it. I appreciate you helping everybody supersize their client's net worth and theirs at the same time with EquityXL. Thank you so much for being on the podcast. Also, huge shout out to Gordon Marketing for all their support. And it's very thankful for the opportunity to partner with you guys on this opportunity. It's really exciting.
We appreciate it, Cody, and we really appreciate the partnership.
Thank you.
Yeah, thanks,
Likewise.
Cody. It's
Yeah.
great.
Thank you guys, man. Okay. Also, once again, the link will be in the description below. Go check it out. You can grab the book and even speak to these gentlemen about what they're doing and how you can learn more. Thank you guys for hanging with us. I love bringing unique concepts and ideas and training to help you grow as an agent or advisor. If you've loved today, let me know. Also, as always, if you haven't tried CABOOM Leads, you can go to CABOOMLeads.com, use coupon code YouTube, and get 10% off your very first order. Thanks for hanging. We will see you on the next podcast. Bye.